patience. So we're letting people enter the webinar. We will be starting very shortly. In the meantime, perhaps I can ask Train to launch the video.
Yes.
Thank you.
Nadia, I need to take over the... Okay. Give me 1 second. Do you see the video? Can you confirm? Sabine, you are on mute.
Not yet.
Okay.
Not
Okay, do you see the video, everyone?
AfricaNenda.
Can you confirm?
No, not yet, please. We only see your black screen.
Oh, okay, sorry.
I leave my microphone open so when it opens. Thank you for joining us. Apologies about the little technical glitch. Bonjour à tous. Merci d'être là. Okay, we see the video. Thank you. Please start from the beginning.
on. Hello, everybody. Hear me despite the no sound for the video. So apologies for the technical glitches. We're very happy to have you here. I think we're waiting for participants, and then we will be able to start. And we welcome you to this webinar by AfricaNenda, and hopefully we'll have a great discussion. I hope you are aware that there is translation on the button on the bottom, translation and select the language you would like to hear the webinar in. Then you should be able to hear either in English or French. All right, Jacqueline, let me ask and get confirmation from the comms team. Shall we start? No. Please let me know.
Yes, Sabine, we can go ahead.
Excellent. Jacqueline, to you then.
Thank you. Good morning, good afternoon, everybody. And welcome to today's Ask Me Anything session, where we'll be exploring some insights on accelerating cross-border digital payments, and particularly looking at the policy and regulatory harmonization opportunity in Africa. My name is Jacqueline Jumah. I'm the Director for Advocacy and Capacity Development at AfricaNenda, and it's my pleasure to have you all as part of this forum. Before we start, I'll allow my colleague to introduce herself, and then we can go through some room rules, and then we set off.
Wonderful. Thank you very much, Ms. Sabine Mensah. I'm Deputy CEO at AfricaNenda. Back to you.
Thank you, Sabine. In this session today, we expect it to be an interactive session, and all of us are welcome to have any questions, because it's literally an Ask Me Anything forum. But to come from some common ground, we will have a very brief presentation where we'll walk you through some insights from our set of inclusive instant payment systems report from last year, just for the basis and just for warming up in terms of preparing those questions that we're expecting today. And feel free to put as many questions, as many comments, thoughts in the chat. So today we will first explore the current state of inclusive instant payment systems in Africa, and then we will get into a conversation on the digital payments, policy and regulatory harmonization opportunity to accelerate cross-border payments in Africa. I cannot see the slides, so I would request Nesrin, please put up the presentation.
Yes, just give us a second.
Thank you. Next slide, please. Yeah, this is okay. Before we get to the definitions. Okay, anyway, so before we appreciate what instant payment systems are and the landscape, I think it's good that I would briefly just touch on the research objectives and methodology, just to revisit the intentions and how we all ended up with these insights. So the insights to be shared today are from the State of Inclusive Instant Payment Systems, what we call SIIPS, in Africa Report 2023. Which is the second in its series and an outcome of a collaborative research initiative by AfricaNenda, the World Bank Group, and the United Nations Economic Commission for Africa. So every year we have this research, and the insights that we will be showcasing today are part of that bigger research initiative. So the research is to inform public and private sector stakeholders in Africa and beyond about developments in this space and looking at instant payment systems in Africa. And this also includes an assessment on whether these systems are actually inclusive. And we only consider, as of this report, we only consider systems that were live in terms of conducting transactions and functionality as of June last year. In terms of the method, the mixed method research was adopted, where we had the supply side IPS landscaping, we just looked at the literature review, spanning from various sources, of course, and key informant interviews. And on the demand side, we had the consumer research, which involved extensive in-country qualitative and quantitative research covering low-income adult individuals as well as MSMEs across 5 countries. These countries were Cameroon, Malawi, Morocco, Rwanda, and Senegal. And the primary consumer research explored the use cases, desired features, unmet needs, and perceptions. And from this, we were able to develop profiles and further investigated the overview of the barriers and incentives that led to the adoption of digital payments. So what do we mean by instant payment systems, and when do they become inclusive? AfricaNenda and its partners define instant payment systems as open-loop multilateral retail payment systems that enable the transmission of low-value and digital push payments through a set of procedures, rules, and technical standards, and where the final funds are available to the payee in near real time or as near to 24 hours, 365 days as possible. Also, we consider a single instant payment systems can also encompass one or more systems in which licensed payment service providers participate. And this instant payment systems definition scope involves instant retail payment systems domiciled in Africa that are open loop and that enable digital push payments in real time. Of course, we appreciate that there are instant payment systems in the continent that are not domiciled in Africa. And we just want to emphasize that the scope here has been on those that are domiciled in Africa. And this categorization, therefore, explicitly excludes proprietary on-us instant payment systems, including most card scheme. So at least with that common understanding of how we define instant payment systems, also get to appreciate when they become inclusive. So from our perspective, they become inclusive when additional attributes designed to meet the needs of low-income consumers are enabled. And what you see on the screen there underlined are some of these attributes. And these have been derived from an analysis of various principles. So borrowing from our colleagues under the level 1 principle, level 1 project principles, for instance, the UN principles of responsible digital payments, standards from the BIS Project FAST, and so on. So inclusivity to us, therefore, is measured both in terms of functionality, which means the extent to which the payment needs are met. And here we explore the instruments, channels, and use cases, as well as whether they're inclusive from a governance perspective, where we explore attributes that, like the extent to which the participants or the licensed payments providers have fair access and contribute to decision-making within the schemes. I'll hand over to Sabine to showcase the lay of the land in terms of instant payment systems. Over to you, Sabine.
Thank you very much, Jacqueline. Actually, I want to add a bit more color into the definition slide that just passed. So if you can go back to it. I think I want to stress with people is that when we're talking about inclusivity, we are looking at it from 3 lenses. The first one is from a consumer lens. And from a consumer lens, it is important that whatever digital solutions we are putting in the ecosystem, at the bare minimum, mirror what you can do with it. So, and it has to be as affordable as possible. That's why, because in the consumer mind, cash doesn't have a cost. I have your money, I'm giving it. There's no cost. Although there are opportunity costs into using cards. There's the risk that, of course, it's cash and it can get lost and anything can happen with the physical cash. But the fact that there is that perception that there's no cost is important, that the system enables perspective, and it also enable consumers to send whatever amount of money they want, whether it's $100, $10, $1, doesn't matter. One piece of the inclusivity from a consumer perspective, and also that interoperability mandate. It's because if I'm already, low income, there's no reason for me to have different instruments. With the most basic phone, I should be able to interact with the entire financial ecosystem from wherever I am. So that's also why the interoperability, the open loop aspect is very, very important in our definition of inclusivity, especially when you're looking affordable, accessible to consumer. And I think Jacqueline mentioned also the governance piece of it, which is really making sure that any license can participate in that ecosystem, can service consumers. And if we do that, we are encouraging competition into that ecosystem, and a competition hope and in the end benefiting the consumer, and can also take the price points lower and lower. There's aspect of the suppliers all being at the same level in inputting into the scheme. There's, of course, the supply side can also do in an inclusivity perspective. It's not just about being able to send money and receiving money, but it's literally everything that you would want to pay, want to do with your money, you're able to replicate that in the digital ecosystem. So servicing individuals, small, medium enterprise, and all the use cases possible. If we're able to do that, then it makes sense for somebody to transition from cash, because there's more you can ecosystem. We also recognize the risks that are inherent with digital payments and how they play a role into the trust that consumers have in that. And that's where we are stressing also that consumer recourse mechanisms that are transparent, that are efficient, that are well known, so customers can have a recourse when things are not working. We know what we need to do, and we are sure that there will be a resolution into the complaints that we are putting into the mechanism. So I just wanted to bring these colors into that definition and making sure that we're not just looking at it from a supplier side and functionality and governance, but we're also looking at it from a consumer perspective. Part of the exercise we do with the State of Inclusive Instant Payment System every year is to build a landscape of the different that are live in Africa. If we move to the next slide, we'll see what the picture was in 2023. And I'm saying 2023 because we are all currently working on the picture for 2024. So this will change. But as of last year, where we ended 29 of the instant payment system were a country level system, so domestic, national, depending on how you want to call it, and then 3 systems. So there are enabling transactions across borders. And when you put all of them together, so those are 32 live instant payment systems. They facilitated transactions about 31 billion transactions in 2023, which amounted to close to 1.2 trillion US dollar in value. Now, a couple of things I want to mention here, the color scheme, when you see the different types of instant payment system, it's important for us to mention that you have bank instant payment system, we have mobile money instant payment system, what we're calling cross-domain instant payment system are systems that are interoperable, bank to wallet to bank. So, and then we have a currency instant payment system leveraging CBDC, which is the e-Naira in Nigeria. The interesting before the year passed in 2022, the systems were covering 20 countries. This year, with the addition of Ethiopia, Tanzania in Morocco, and PayShap in South Africa. I think I saw somebody from PayShap is on the line. So these 3 new systems brought up 1 additional country. So we still have about half of the continent that is not covered by a national or regional system. So it's a lot more for us to work on, despite the fact that there are several countries, I think 7 of them that have instant payment system. From the regional systems, we have GMAC Pay covering Central Africa. We have the TCIB scheme covering this, and of course the PAP system, which is at the Pan-African level. So if we move to the next, the story doesn't end here, because the 2 that are active in Africa right now, but we have several countries that are working on their pathway also into building the instant payment system. About 17 of those last year that voiced that they are at some level working on their instant payment trajectory. And we also know that there are regional systems in the work, including the COMESA system, the one in East African Community, and the one in West Africa Economic and Monetary. And as I'm speaking to you right now, I sit in Abidjan today, and very, very happy to hear that the YMU instant payment system July. So we will have in the next report that we pull out this year, the system as a live one, so which is great for the ecosystem. And next slide, I think what I would like to perhaps, Jacqueline, come back to you. And we've talked about the inclusivity, but maybe you can help explain how we've assessed this inclusivity with the different countries and mapped it around this inclusivity framework. Back to you.
Thank you. Just from the definition on inclusivity that Sabine has shared with us and added color to, AfricaNenda, in establishing the inclusivity of instant payment system, developed what we call the inclusivity spectrum framework, which is a high-level tool that we use to track this inclusivity. And the spectrum takes into consideration various things, which include the regulatory environment and various instant payment system attributes, as mentioned, and categorizes the instant payment systems based on 3 levels, so ranging from the basic level, the progressed level, and mature level. Those that are categorized as not ranked are not yet, have not yet demonstrated the attributes that we use in the ranking in this case. So for instance, at the basic level, instant payment systems that are ranked here include 2 main criteria when it comes to their basic functionality. And these criteria are essential for inclusion of all users. So considering enabling the predominant local channel that is available to most users within these markets, whereby the IPS enables the channels that most customers that have accounts use, or used by the population within that particular geography, either domestic or regionally. For example, if this channel supports mobile money transactions via the instant payment systems, where the preferred channel, for instance, could be USSD, as we increasingly see, we would check that as an attribute that has been achieved. We also, under basic level, we also see that, or we also consider those that enable person-to-person and person-to-business use cases at a minimum, where this just provides the opportunity to scale for personal P2P transactions, and P2B enables efficient business models where where business models which drive the adoption of merchant payments within this market. So we see a lot of the instant payment system starting with the P2P and P2B, and therefore we consider these use cases as the bare minimum in terms of the functionality and supporting the least use cases that we see in the space. When we move to the progressed level, instant payment systems here are those that fulfill the basic level criteria and include 3 additional criteria that are mostly related to the governance of the instant payment systems. Here we see the criteria on allowing all payment service providers to participate in the schemes, where we see commercial banks, non-banks, so for instance, the mobile money operators in most markets that are non-banks, the fintechs and so on, all being allowed into the system to participate. And we define these instant payment systems as the true cross-domain payment systems, where the scheme rules allow for an all-to-all interoperability from the transactions origination to termination, so involving multiple accounts and wallets and involving multiple payment service provider types. And this also, from a demand side, enables the end users to transact with each other, regardless of where they hold accounts or regardless of what type of accounts that they have, whether they have wallets, basis mobile money providers, or they have bank accounts in accounts. And this increases the size of the payment network, because you're considering every type of stakeholder in the market, whether a bank or a non-bank, and it has some positive network effects in the way that increases the transaction volumes and the efficiency of the infrastructure, because the infrastructure is shared, and therefore there's the implication of the reduced costs. There's also the attribute of engaging in poor governance, where we see that the IPS here has established various provisions to allow all licensed participants who are financial service providers or payment service providers to provide input into system decision-making and design. So they contribute to the rules of the game in operating and offering their services to the end users. And alternatively, these contributes to this what we refer as inclusive governance. The other attribute that falls under this progress includes the involvement of the central bank in the governance, where this ensures the elevation of inclusivity targets, and it also champions the goals of integrating all players within the market into the system. And we see here that increasingly central banks are playing this role of even owning and even operating the instant payment systems. But it's most important that these processes are consultative so that the market feels that there's that fairness and the level, the playing field is that open in terms of providing that input that is necessary in the governance structure. When we move to the mature level, we see here that IPSs would have fulfilled the basic as well as the progressed level criteria, and as well as additional functionalities when it comes to what sort of use cases that they support. So ensuring that they have the full range of use cases, including the P2P, P2B, G2P, P2G, B2B, and so on, mostly driven by the nuances across markets. And therefore, there's a holistic payment system that supports the ecosystem and supports the full digitization, which just means ensuring that a lot of the liquidity happens in the digital format. And, the use cases are interlinked. So for instance, in some markets, you would see end users, the digital payments championing other use cases that are built upon just the P2P. There's also the attribute on providing recourse, where the IPS sets standards for participants to ensure that the end users' recourse or redress mechanisms are in place. They are consistent with consumer protection, data privacy, and cybersecurity laws. So here, the instant payment systems effectively monitors the provision of these or adherence to the recourse structures, and ensuring that other challenges like risks are mitigated. And in this case, the system also provides an additional layer to the end users to provide or provides channels through which the end users can raise complaints or just feel like they're able to raise their voice in the event that they have issues. And that way, this is an important attribute because it champions or it enables that trust that is so much needed, especially for the low-income segments in interacting with the digital payments. And then we also have a final attribute, which we are also still trying to map the rule of thumb in terms of what we mean by low cost. At the moment, the benchmarks are around delivering not for loss business models, but also increasingly we are still reviewing what would be, what do we mean by affordable, especially to the end users. No rule of thumb yet, but as what we are seeing from the market, the cost recovery models are what are being championed. And here participants continuously monitor their pricing of non-compliance with any system-wide pricing conditions, such as just benchmarking on caps and zero-fee requirements. Therefore, when you look at all these attributes, you'll see that based on this inclusivity spectrum, a majority of these instant payment systems in Africa are not inclusive. Not all instant payment systems offer access to most in-demand channels or the predominant channels in the various markets. Many are not yet cross-domain, or they don't enable cross-domain interoperability, which also provides the greatest choice to the end users. Many of them only have limited use cases, and only a handful have integrated use cases beyond P2P. These limitations are challenging the ability of them to scale and the fulfillment of their role as digital public infrastructure in Africa. So to see how this fits within that digital public infrastructure, because at AfricaNenda, we always believe, or we have developed this narrative around how inclusive digital, inclusive instant payment systems play that DPI role. So we state that if inclusive instant payment systems can reinforce the payment layer of DPIs in Africa, because we see that for instant payment systems in Africa to increase access for all citizens and form an effective payment layer in DPI, systems need to improve in these attributes, as we can see, in terms of sustainability, which just means the design for scale. So ensuring that they are addressing the market needs, ensuring that there's the customer centricity, and by looking at supporting what the customers want and addressing their pain points. We also see another, key requirement as a compelling value proposition, especially for the players that are coming in to offer these services and extend solutions to the users. And lastly, a conducive policy environment, and I know we'll talk about a lot when it comes to the policy conversation later today, but here we look at that continued improvement of supporting the ecosystem, where we ensure that they have we ensure that the ecosystem has an enabling environment, an open and level playing field, and moving towards risk-based supervision. The other key considerations around policy here have to do with building a principle-based regulatory framework that adheres to consumer protection and data privacy, as well as just exploring regional harmonization of policies and regulation for cross-border payments, which is the basis, or which is the core or the meat of the conversation today. Next slide, please.
Speaking of that, let's move on to the meat. Focus on the cross-border payment and the challenges that we're seeing. What I would like to do is just to take you through the challenges from a customer. I'll ask Jacqueline to come in and share the challenges from an operator perspective and from a regulator perspective when we're looking at cross-border transactions after that. So if we look at it from a consumer perspective, really there are major challenges, but one thing we have to agree, and we look in the ecosystem, cash remain king in Africa, despite all the efforts that we are doing. What it means also from a cross-border perspective is that the informal channels that are there for cross-border are offering a value to the people that are living in the cash economy. It's powerful competition to any cross-border payment scheme that's available both for consumers and also from a micro, small. There's also the fact that when we look at the offers that are on the market, it's challenging sometimes when we look at it from a cross-border to find solutions that are focused on trade payments, particularly for MSMEs or for cross-border traders. I think 2 years ago, the Mesa region on cross-border traders, and really it was clear for them, like there are no options, enough options for us, and that's why we are using cash and trying to find ways, whether it's through the bus or somebody who has a business on the other these payments. So the lack of the diverse options for merchant payments, cross-border trade payment, suppliers, B2B payments, cross-border, really makes it a bit difficult for consumers and for small businesses. Continue building that reliance on cash and informal ecosystem for remittances between the different countries. And the third one, which is, I don't think people are informal, it's because they don't have any other options that competes well with the informal. The cost of remittance remains very high in Africa, averaging about 7% when we look at it from a World Bank perspective, while the United Nations Sustainable Development Goals 10C is actually calling for this cost to be 3% or below. So it means that we're still far away from a cost perspective in making cross-border payments affordable as much as possible. So when you put all of this from a consumer perspective, we also went in and looked at it from a perspective. So these organizations, these financial service providers, these fintechs that are providing cross-border payments, what are the facing as well. And then we can go to the regulator and look at the specific challenges they're facing and see what are some of the solutions or at least pathways overcoming these challenges. So Jacqueline, maybe you can talk to it about from the operator's perspective.
Thank you, Sabine. There are so many operations barriers that, the typical PSPs or payment service providers incur when it comes to operating or, when it comes to delivering solutions to end users. But for the purposes of the conversation today, we have picked out those barriers that specifically speak to cross-border, facilitating cross-border payments. For instance, in inconsistent messaging standards, we know that for cross-border to be enabled, or for these players to enable cross-border, interoperability has to play a part. And interoperability means that there's some integration and translating of messages across entities and countries is a requirement. And so in the case of disparities in terms of these standards, for instance, in translating from ISO 222 to ISO 8385, it becomes a challenge, and it becomes also costly because of the different or the differing mandated messaging standard frameworks between countries. And this complicates interoperability, particularly between countries with nascent financial sectors where, there haven't been significant investment in the level of technology and infrastructure. But when you look at countries with significant fintech frameworks or ecosystem, including Kenya, Nigeria, South Africa, and others to mention, there are at least some agreed or some advancements in streamlining the messaging standards to ensure that there's some format validation between the payment systems. And so, in as much as there are challenges as well, but they're not as significant as those markets that are a bit nascent when it comes to these complexities between different standards. The other thing has to do with expensive liquidity management, where we see this imposing disproportionate costs on these providers due to challenges on challenges around partnership costs, and where there's also the requirements for cash flow guarantees. And we also see competition for liquidity between cross-border systems as well as the domestic requirements. Because, for instance, these payment service providers are required to have several different correspondent accounts where also they're required to pre-fund or, to facilitate these instant payments. And so having these funds, sometimes maybe idle funds in one market and busy funds in another market, it becomes costly at the end of the day to hold so many accounts and having to pre-fund these accounts in different jurisdictions. So moving on to the other aspect, which is the costly and opaque foreign exchange pricing, we see that cross-border retail payments, especially remittances, are a major source of hard currencies for African countries. There's limited demand because all these currencies are pegged up to the dollar, especially, and the actual foreign exchange spread is pretty often higher than and given the lack of a foreign exchange market where currencies can be traded at competitive rates. So this results in dual exchange of currencies that are converted onto, and as I mentioned, pegged onto the dollar. And so it becomes difficult to bear, scenarios such as when there's the demand for on-the-spot currency risk, because again, the currencies and the inflation and there's a lot of changes in terms of the liquidity basis, the change in the currency valuation against the dollar, and foreign exchange pricing practices also lack transparency in some markets, which prevents different partners and end users from understanding what sort of markups are involved in the currency exchange, and at the same time in what they're required to hold, for instance, whenever there are any on-the-spot risk evaluations. The other thing, we look at also the stringent requirements for correspondent banking, where these banks, they play a critical role in terms of bridging funds from country to country, or from domestic payment systems to the cross-border, from domestic payments to cross-border payments. But they're also difficult to access, especially for PSPs that are, the non-bank payment service providers. And there are so many reasons to that, because the vetting is quite detailed when it comes to adhering to regulatory and enforcement around AML, CFT concerns, and so on, as well as compliance. So it is very difficult, and as well as the scarcity of these banks as well, and the relationships with the banks. They are not, when it comes to fintechs, there's a struggle when it comes to going through these multiple compliance requirements across countries, and at the same time having access to the correspondent banks. So I think we'll move on to the regulatory barriers, although you had moved the slide a bit earlier. But yeah, so when it comes to the regulatory barriers, this is just a picture of what happens behind the scenes, moving from one country to the other, where in one country you have a payer, and you also see the front end elements, which is the access point, could be an agent, could be just a customer initiated transaction. So the customer has maybe a mobile phone and the instruments involved in the accounts, and you also have the backend providers, those that sit in between, as well as the correspondent players. In summary, we see various challenges around regulation when it comes to this flow, ensuring that ensuring the financial flows from country A to country B, such that, for instance, if there's difference in the licensing frameworks, then we see a challenge in the way a player from country A would move to country B and still adhere to the same level, to the different levels of requirements. And at the same time, there's the cost implication in setting up shop in country A and in country B, and so on. And this introduces challenges around how level the playing field can be, especially for those stakeholders that, especially for fintechs. And that's why in the coming slides, Sabine will talk about what we're beginning to see as emerging insights on what could be the solution when it comes to ensuring that this this playing field is open and level. There's also some challenges.
We're running out of time, so you need to.
Okay, so there's also some challenges to do with what sort of customer due diligence requirements in disparities on the customer due diligence requirements, where different countries on the continent use varied approaches to customer due diligence and institutional due diligence, and then know your customer regulations and guidelines are challenged to navigate from one country to the other, especially from a compliance point of view, with the fintechs having to comply with each and every market's requirement. So later on, again, for the sake of time, Sabine will go through what could be the solution for some of these challenges, as well as other challenges around how unclear regulation can be sometimes from country to country, when it comes to what sort of positioning do the payment service providers need to consider, the frictions they cause, because on one hand, regulation is important, but sometimes it can cause frictions and so on and so forth, especially in the transition from one market to the other. So I'll allow Sabine to come in and share what we have found as some of those insights or some of those emerging solutions for some of these challenges that we see as regards cross-border payments.
Thank you very much, Jacqueline. I think in our analysis, what we've done is separate what is within the privy of the financial regulator and what's outside of the financial regulator's privy and influence. So with that in mind, we don't really the barriers or challenges we are seeing in cross-border payments. One is really the access to markets. So on these financial service providers in one country to be able to expand in other countries and across the continent to leverage the Africa Continental Free Trade Area as a market that's open also to the financial service providers, to the fintech of this world, and facilitate these cross-border. The key challenges for that expansion to happen smoothly is the disparity in the fintech licensing regime from one country to while you're an existing entity in country A and you're looking at expanding in country B, the licensing regime of the country B, you have to start from scratch and the timelines can be very long. So it really puts challenges into market. So that's a key area that regulator can impact by, providing some type of harmonization, mutual recognition between themselves of how those fintechs are being licensed and how one license in one area can be recognized or provided a faster implementation because there's a mutual recognition of, the licensing regime in country B. So that's definitely in the privy of the regulators that they can impact for seamless cross-border payment. The currency exchange models and the regimes, look, in some regional blocks, like I am sitting here in Hawaii, in the Central Africa region, it's an economic and monetary union. So between those countries in the bloc, transactions cross borders because it's the same currency. However, when you want to take money outside of the bloc, then there's definitely some input into the convertibility of the currency we have on the continent between our different countries and the burden it puts in terms of FX management, the balance of payment that abide by. So that's also an area that potentially regulator, financial regulator, and central banks can influence. Trade, we want to have those cross-border payment is to enable trade. And in the case of AfCFTA, seamless intra-Africa trade happen, you need those payment systems. You need them to be interoperable, not only at a country level, but also cross-border. But that law is not necessarily on the privy of the financial regulator. It's a much wider scope. When we look in the second category of which is really from a compliance perspective, from a customer due diligence, from a KYC perspective, there are differences. Cross-border transaction is you're starting a transaction in country A and it goes to another country. If the KYC regime, in country A are different from country B, and you're trying to make that transaction instant, there are some challenges. So there's definitely also for regulators to work on harmonizing, the KYC regimes, enabling eKYC between our different countries, to ensure that these transactions go smoother, faster, and we're able to enable these seamless cross-border payments, compliance environment, and where there are harmonization opportunities into the anti-money laundering regimes that are out there, an impact into how we can facilitate cross-border, and it's within the purview of the financial operators. And of course, earlier, Jacqueline went through we're seeing from a financial service provider. I think one area, though, that it's actually been a bit difficult for us when we're doing the assessment is understanding what is the financial consumer protection environment these instant payment are evolving different or similar they are from one country to the other. There's of course the bigger ecosystem issue in terms of the stringent requirements that are from one country to another, and that impacts how financial service providers can also innovate, whether they have the ability cloud infrastructure for some of the work that's happening in that ecosystem, and what are the regulations around data sharing. So those are within the preview of only the financial regulator. There are more regulators intervening in that space. But it was important of saying throughout cross-border payment, what are those challenges? Which one are within the preview of the financial regulator? And a policy and regulatory harmonization journey, where do we start? What do we focus on, and how is this journey gone? If you look at the next, look at benchmarks across the world, looking at the example of the European Union and what has happened with the payment service that the single euro payment area. If you go to the next slide, you can see learnings from their harmonization journey. Not a seamless journey. It's not a one step, yes, we want to harmonize and we go. Not quite. We already nations in Africa that are working on harmonization at the sub-regional level, whether it is with the regional economic communities and others. And the whole, when we look at it from Europe experience, but also from Asia experience, because there's been also a lot of work going on there on policy and regulatory building blocks that could provide a pathway or a roadmap, if we could say that, towards that harmonization. The first area is making sure that the policies that are at the domestic level are inclusive policies, that are enabling regulations at the how these country policies can align with the regional economic communities that we are seeing across our different regions. And that level of harmonization between country and region is also important. And how do we bring the regional entrenchments such as the AfCFTA? I think we're very lucky to have the AfCFTA in Africa. It provides a basis for us to a much larger policy and regulatory harmonization for cross-border payments, so that regardless of where you are in Africa, able to send money, you're able to pay, receive payment within instantly from anywhere in Africa to any Africa. At least that is our dream at AfricaNenda. So for the sake of time, we really want to stop here and enable questions and the opportunity for us to take any or questions that are already put out in the Q&A. So hopefully my colleagues from the comms team can answer the question.
Yes, Sabine. Thank you so much, Sabine and Jaju and Jacqueline, for your great presentation. I'm sure that our participants have plenty of questions, and we already have 8 of them in the Q&A box. So I will start with the first one in chronological order. Hla Sheila is asking, all are these 29 systems DPIs, or some are privately operated?
It's a good question. So not all the systems are DPI per se, so I will put out 2 things. When we look at the governance of the systems, the 29 systems, there were 3 types of systems. One was central bank, or the central bank has a subsidiary that takes care of the payment system. It's the case in Ghana with GIPS being a subsidiary of the Bank of Ghana. It's the case also in the Central Africa region with GMAC being a subsidiary of the BEAC, which is the Central Bank of Central African States. So another set of these 29 systems where associations led. For instance, a banking association has put up PesaLink, for instance, in Kenya, as an example. Was a public and private type of partnership for the system. So depending on which country and which system, the setup of the governance and the ownership systems are quite different. So hopefully that answers the question. But if you do want more details on which specific countries, I will encourage you to read the SIIPS 20 detail that there. Back to you, Nisreen.
Yes, and we will be sharing the links after the questions and via email. So look forward to that. Not a question, but a comment from and excuse me if I'm not pronouncing your name correctly, Really Bohile is saying Lesotho implemented the domestic instant payments in 2022. So thank you so much for sharing that information.
Yes, I want to
yes.
say that this will be in the 2024 report.
Yeah.
Let's switch with report indeed. Congratulations to Lesotho.
Yes, look, it's always good news to hear about these things. Moving on to Andrew, who is asking, most of the implementations I have worked on are offering P2P payment services with limited P2P and B2B. What are the factors hindering P2P and B2B service offering on IIPS?
Like this?
Sorry?
No, I thought Jacqueline. I was saying, Jacqueline, do you want to take this? But I'm happy to start.
Well, yeah, so it's very common. I hope you can hear me. It's very common to see implementation starting with P2P. I personally think it's a sort of seeing what markets that are ahead are doing and also going to implement the same. That is one. And secondly, I think there's some influence in the level of acceptance of merchant payments at the moment. Not yet there. So most players are thinking, okay, perhaps the P2P can drive that digital adoption behavior and eventually create merchant to merchant payments acceptance, and therefore that use case will come where there's a bit of traction in terms of the customer numbers and the acceptance. So I think it's an acceptance and also just seeing what other markets are doing around you, and eventually the sequence is considered that way. But happy to also hear any other thoughts around how this is or why this is the case.
You know, Jacqueline, I agree with you, and our analysis even showed that more in Africa have already started with P2P. Out of the 32, I think we have 30 that already offered P2P. Much smaller number was about 22 of them offer the P2B service. And then, of course, the other use cases are being built up. Necessarily the pathway to go. It isn't said that you have to go sequentially, because PIX in Brazil, the full IPS actually in the world from a global perspective, started with all the use cases enabled from day one. One can see that this has contributed to the stickiness of the solution and onboarding millions and millions of people short time record. So, but you know, we have to start somewhere, and I think I hope that we'll see more and more building more use cases from the get-go to see how this is going to work out. But historically, what we've seen is that everybody start with P2P and then their use cases. Back to you.
Okay. Yes, thank you so much, Sabine and Jacqueline, for answering this question. So for the sake of time, we have 1 minute left, so we will take one more question, and the rest I think we can take them via email, and we will send you all the documentation available. No,
I
Sabine?
disagree. I disagree.
Okay.
They said, ask me anything. We're taking all the questions.
Okay. Okay, your call. Your call. Okay. So the next question. How are payment service providers, PSPs, mitigating risks related to fraud and cyber attacks in cross-border transactions, especially considering the diverse regulatory environments across countries? And this was asked by an anonymous attendee.
This is a tough question. That's a great question, because that is one of the fraud is one of the biggest risks that we are seeing, is that there are investment into public good services that are providing aggregated fraud and payment system. I think Tazama is a new one coming in the ecosystem. It's open source, and the ambition is to actually aggregate information on fraud and make that available to the ecosystem, regardless of where they are. I think that's one way to help. I think there's a necessity for these instant payment cyber security and resilience model into the IPS itself and make that a facility open to all of the participants, in addition, of course, to what each financial service provider themselves are doing to secure their own platform. Tough question to be done in that space to make sure that, you know, the overall financial ecosystem becomes stronger and stronger. You see the increase of fraud incidents in the ecosystem.
I think maybe to also just add, which is something I think it's both a coping mechanism and it's it's also going to like maybe be quite big in you know, just aiming to drive risk mitigation, and especially from a cross-border perspective, we're increasingly seeing stakeholders really building their compliance with global standards. So not just waiting for the regulator to present this is what you need to present a checklist, this is what you need to do to comply, but adhering to international standards such as the, you know, safeguards and on payment data and so on. And also adapting to local regulations, so ensuring compliance with country-specific regulations, such as the General Data Protection Regulation, for instance, as we see in the European Union, and other local laws that govern data protection and financial transactions. So benchmarking on international standards, but also localizing and not just waiting for, you know, a checklist of some sort that you need to comply on. And you know, we're seeing increasingly, you know, stakeholders taking initiative to comply to those standards.
Thank you so much. We have a question from Umar, who is asking, what impact can IPS have on the business of payment aggregators?
Sorry, the question
Sabine,
is?
you're on mute.
I am so sorry. You know, I was saying to myself, that's a great question. We are advocating for licensed payment providers can access any IPS. So whether they are payment integrator, whether they are fintechs, whether they are mobile money providers, and that's where we're advocating for these open systems, inclusive governance, so that, you know, aggregators can also access the ecosystem and can service, even if it's from the back end perspective, and enabling an ecosystem that's most inclusive. So I hope we'll see more countries and more regulatory environment that to be part of the ecosystem and to be part of the chain to better service consumers.
Okay. So we have following up, we have many questions coming up, so this is great. So Dixon is asking, as a fintech founder, I have built a solution that does P2P and C2B solution that solutions remittances and e-commerce businesses. However, the challenge is the regulatory space. It is a big challenge for startups that are self-funded that makes these solutions not to scale as fast as possible. He's saying, this is not a question, but I have learned that one way to counter the informal sector is to recruit these facilitators as agents and put them on commission basis and bridging that gap with the financial sector players as banks to facilitate cross-border payments where we lose a third to the payment. Any comments?
I think it's a good point. I think the regulatory environment is challenging. This is one of the reasons why we are really advocating for regular Africa. I think for a fintech or a startup like yourself, depending on which country or region you are, maybe looking at if sandbox that would enable you the opportunity to play in that sandbox and see with the regulator if you can offer your services. There's a magic bullet to that, but we're certainly working with regulators to ensure that the environment is more and more in enabling startups so that they can provide services to consumers.
Metule, again, sorry if I'm not pronouncing your name correctly, is asking, cross-border retail payment system will be a great thing for sure, but I think a good way to do that is by using wholesale CBDC and a central settlement bank for Africa, question mark.
Question. This should be for African Union, that question. Because I know that there are discussions and work going on into what's called the African Union Financial Institution, AUFI. So I think there are thoughts around it. Now, with regard to CBDC as a solution for cross-border, some of the challenging we're seeing on cross-border for sure. I think the question is whether CBDC is a wholesale solution for the financial service players in the and streamline that cross-border challenges, or if CBDC is a retail solution for consumers, and in which case you have or the central bank and the financial service providers will play together into that market. But good point.
All right, next question. So these are keeping coming. So what technological advancements are being considered or implemented to streamline the integration process across different banking systems and improve interoperability?
Okay, Jacqueline, you want to start on this?
Yeah, we're seeing definitely some advancements. So I'll just speak to some of them, like the API standardization, where we're seeing open banking APIs or open banking initiatives to promote standardization and enabling security. We're seeing also the ISO 222 messaging standards, the adoption of these standards as a global standard for financial messaging, and even just to facilitate that uniformity and better interoperability. We are seeing also in what we call centralized payment hubs, where stakeholders are implementing centralized payment hubs to act as intermediaries that can standardize. We're seeing fintechs just emerging as the interoperability or centralized payment hubs to facilitate the interconnectivity between stakeholders, as well as regional payment, regional payment, centralized payment hubs, that facilitate from one country to another country, and they remain behind the scenes. We've seen the likes of Thunes that play in between stakeholders to just facilitate easier interoperability. Yeah, we're also seeing, yeah, go ahead, Sabine.
I was gonna see the emergence of digital public goods being used, whereas regulators are saying maybe we will work on doing this and customizing a solution for our market, leveraging digital public goods. And this is an example to, for instance, the Bank of Tanzania with the instant payment system that has been put out. So that's also a trend that we're seeing in the ecosystem.
Yeah. As well as, yeah.
Go for it, sorry.
Oh, sorry.
Go for it, Jacqueline. Sorry, I interrupted.
Yeah, I just wanted to mention one last thing, as also increasingly we're seeing advanced security protocols like tokenization, encryption, to just make sure that, there's the secure data transmission and storage, as well as biometric authentication. So integration of different biometric technologies to just ensure that seamless replication from one system to the Over to you.
All right, so we have 3 more questions. Will fintechs and aggregators ever have the opportunity to integrate directly to these payment switches? Are regulators considering opening this up to allow them access to the payment settlement system without leveraging commercial banks?
I have seen instant payment systems that are open to fintechs. I'm not talking about the second. Different question. The payment system can be open to fintech. The participant, the type of participant, can include banks and non-bank. But if you're talking about the settlement piece, which typically is, the central bank and the commercial bank holding settlement accounts, that's typically with the central bank and the commercial bank. And there, from a settlement perspective, what happens is that the fintechs or the startup will need us to be able to do the settlement on their behalf. But participating into the IPS platform itself, yes, that's already in Africa, and hopefully it will happen also in more. But the settlement piece is where it's a bit sticky, where it's you would need to have central bank. Very, very few, I believe, in Africa are actually giving the opportunity for fintechs to do that, but you can as an indirect bank.
I think Namibia is one of the markets that, if my memory serves me right, I think Namibia is one of the markets that allows for direct participation. Is it Namibia or Zambia?
Malawi.
Malawi, yes, Malawi, yes.
Malawi.
Sorry, not Namibia, Malawi, yes.
Yeah, just launched.
Yes, yes. So yeah, it's actually happening. And also just wanted to mention that the aggregators as well have a role to play. That, you know, in the value chain of the instant payment systems, and especially connecting the smaller players to or facilitating interoperability within the ecosystem.
Yeah, and Zambia also.
Malawi and Zambia, okay.
Yes.
Yeah, there's just so many countries and so many attributes to remember. But yeah, I figured there was some few cases that we saw last year.
All right. So how do we see the IPS operating in markets where there is a dominant player who have made significant investments in the ecosystem? What are the implications and how does it affect the competitive nature and investments from financial service players?
That is a great question.
I know that question is from a Kenyan, so I can tell that handwriting.
Okay. We can take
yeah.
a stab at it. I will tell you one thing. Definitely the issue of complex in the market where there's the dominant player, because if they've already made all the investment and if they have a very large market share in that ecosystem, the business case of the interoperability of the scheme has to be carefully layered so that it's a win-win from consumer, but also from the ecosystem that is involved. I think regulators are having is when they're looking at mandating interoperability, because you want to make sure that you're not, you know, disrupting a market that's doing okay, but yet you want to make sure that even if there are dominant players, that you are having that level playing field that we've mentioned, that all participants have the opportunity to service consumer and to innovate around it. So what I've seen in markets in general, even the dominant players, regulators can come to the decision of saying, hey, there needs to be a centralized scheme where everybody contributes and we all to all. But it is a market and case by case, and of course, left to the regulators to assess which pathway they want to take for interoperability. But Jaju, please do add to it.
Yeah, I think you've nailed it. It's heavily driven by market nuances. If the initial investments have been done, then obviously the market will hesitate because of sunken costs and not being able to identify the compelling value proposition for an IPS. And so the market will hesitate, just like Sabine said, and decisions will have to be made in the future of, you know, the stances and approaches for interoperability, and creating opportunities for additional players and making the market more competitive, as well as promoting, you know, innovation. So well said.
Thank you so much. And now, last but certainly not least, the last question by Hawas, who is saying, AfricaNenda seems to have done some sterling work on studying the landscape and documenting the current state of affairs. Thank you very much. What role is it playing in advocacy to push the players to common standards? For example, international bank transfers are accompanied by a SWIFT advice, which is a standard simple document with content that all participants in the financial sector understand. Is there a push for convergence to a similar thing within IIPS African players by yourselves, or anyone else?
Well,
Absolutely.
this is a great
Sabine, go
question.
ahead.
Go ahead,
Go ahead.
Jackie.
Absolutely. And I'm happy. I also saw, I think, a comment on the opportunity to pitch advocacy on policy harmonization with the AU. That's exactly our, what we're currently pursuing as our advocacy agenda, where we've looked at the market, we've created some benchmarks. We know where the market needs to go. We have some precedents in Europe where with PSD1 and PSD2. And so we are beginning to drive some advocacy around how stakeholders or regulators should look at 1, 2, 3, 4 elements, the basics of taking us there when it comes to policy. Harmonized regulations so that there's a common framework on the basis of mutual recognition, like Sabine had highlighted, and also advocating to see how this framework can guide the market towards improved cross-border payments. So that conversation is already ongoing. It's already at the table of the AU. And the discussion is hot in the kitchen, and you'll be hearing from us very soon. Sabine?
Absolutely. Next month, we're in June. Just in 10 days, we are going to be in Tunis for the Specialized Technical Committee of the AU, which bring also the ministers of finance and economy. So we'll have the opportunity to advocate for that in that really stress the need for harmonized policy and regulatory harmonization for cross-border payments in Africa. So we are pushing for it. That's all I can say. Thank you so much. A great question. All right, Nesrin, I think we have exhausted all the questions. Back to you.
Yes, so this is our last question. On this great note, I'd like to thank all our participants for their great attention and for staying over time a little bit. And the questions are very interesting. Thank you so much. Also, thanking Sabine and Jacqueline for the great presentation and kind spirit with answering these questions. Looking forward, dear participants, to the upcoming webinars and learning sessions. Please stay tuned for that. We have a busy summer, actually, so look forward to our LinkedIn page and our community of practice. If you are not a member of the community of practice, please join. A lot of things are happening there, and we will reach out via email with all the details that you need. If you have any questions, please send us an email on info@africanenda.org. Thank you so much for your participation, and over to you, dear colleagues.
Thank you very much.
Thank you, and thank you once again. I think we've come to the end of the session today. Just like Nesrin said, please stay tuned to this channel. Please join the community of practice. There's more sessions, more learning forums, more knowledge sharing forums, and stay tuned. So don't miss out. Thank you very much.
All right. Have a great day. Bye-bye.
Bye.